So step number 3, right? We've talked about determining your tracking method. So the main difference by tracking method, we're talking about cash basis versus accrual basis. Now, this is a step that you will have to think through even if you are using a software. So for those of you who are using QuickBooks or have thought about QuickBooks or using some other software, you do get to choose whether or not you want to reflect your financials on a cash basis or on an accrual basis. So as I mentioned, the main difference between the two different methods is the timing of when your revenue and expenses are recognized, or basically when they are tracked. So for example, cash method is the same thing, or cash basis is the same thing, or it's what you would think, which is basically when cash is received. So revenue is tracked only when the actual payment is received. Expenses are tracked only when the actual payments are paid. So under cash, it's only when cash, and by cash, obviously if you're using a debit card, check, whatever, but it's only when the money is flowing in or out of your account is when you would log that particular entry. So for example, in our previous example, take it back. Remember when the person paid the 50%? So under cash basis, you would only recognize, the cash that you got in. You would never really recognize the, necessarily the account receivable or the revenue. The revenue would only be the $750 and not the full $1,500 until the cash actually came in. So cash basis is easier for smaller businesses, businesses that are just getting started. Keep in mind, as per IRS regulations, cash basis method is only available if a company has less than $5 million in sales per year. So the IRS will cap off when they will even allow companies to represent their financials under the cash basis. So the accrual basis, revenue is tracked when it is earned, even if payment is not received. So going back to our prior example, you made a sale for $1,500, but you've only received the initial deposit. The rest won't be received until later, but you would still track that full $1,500 in the revenue and sales because you've essentially earned that revenue, even though you haven't necessarily received payment for it. And the same thing with expenses. So expenses are recorded when they are incurred, even if payment is delayed. So basically, if any kind of a prepay, or you have an expense that is coming up, certain credit card type things, you would record them even before you actually make that payment. If your business is more complex, been in business for a while, accrual makes a little bit more sense. Under accrual accounting, one thing to note is that the financial results of a business are more likely to match revenues and expenses in the same reporting period, right? So that the true profitability of a business can be recognized. Under cash basis, I actually had this once with when I was working with an entrepreneur. Basically, when they were doing their year-end financials and reporting, let's say, for example, if we were in last year and we were doing 2019 year-end reporting, their year-end net income, because they were doing cash basis, was low, right? Because they had a lot of outstanding receivables. And so, contracts and accounts, contracts that they already had and they had already secured, but they had only received partial payment. Even though they have incurred certain expenses, right, in order to make sure that they're able to deliver on the services or products that the client is requesting, but they had to report all of that in the same, those expenses got reported in 2019, but the income, a good bulk of the income wasn't going to get reported until 2020 because they were using cash basis. I want to pause and just see if there are any questions on cash versus accrual. Okay, so I mean, obviously there's some benefits to using cash basis, and there's some business benefits to using accrual basis in terms of, I think you just have to understand your business in terms of what stage your business is in. It would make a difference. If you're a more complex business, you have employees, this, that, and the third, you would definitely want to use accrual basis. And I say that because you would want to recognize, especially with employees, like you have salaries that you're going to owe them. You have you have like, income tax, right? Taxes that you are withholding from their check that you will have to pay back. You'd want to make sure that you're tracking all of that. And that's going to best help you to understand where your business is. Cash basis under with that example, with that type of business, really wouldn't give you a very clear picture of where your business actually is. But again, for startups, you're just getting started, you're just getting into it. Cash basis is a, more than fine way to reflect, and a little bit, I guess, simpler way of reflecting the two. So Chelsea asks, how easy or difficult is it to switch methods once your business grows? Well, Chelsea, if you're using a software, it's not hard at all. Literally, it's like, I want to say, it's been a little minute since I've been in QuickBooks, but I want to say it's like a click. In terms of switching from cash to accrual, I would definitely consult an accountant, but I would want to guess that you'd want to do that at the end of an actual year or the beginning of a year, if that makes sense, right? I think it would be very hectic to switch your methods in the middle of the year, right? Simply because, yeah, like there would be some things that you've missed, you would just want to definitely make sure that you're doing it at the start of a new fiscal year for you, whatever your fiscal year is, assuming that your fiscal year is a calendar year. Did that answer your question, Chelsea? Okay, perfect. So we'll go through some advantages and disadvantages. We talked about a few, but cash basis obviously is simple to use since it only accounts for cash paid or received. It's easier to track the cash flow of a company, which is helpful, especially when you're starting off, right? When you're just getting started, cash is everything. Cash is king no matter what stage you are in your business, but certainly when you're just starting, because you probably are having so many expenses, and just starting to get revenue and earn business and get clients and customers. It's probably really important to be clear about where you are with cash. Some of the disadvantages, as we mentioned, it might overstate, or like I said in the example of entrepreneur I was working with, it might understate the health of a company that is cash rich but has large sums of accounts payables that far exceed the cash on the books. Now that's for big businesses who are likely, like, literally getting, maybe getting inventory on, um, not on IOU, but basically, getting inventory on like an account and then they pay them back later. That's probably not really anybody here who would have that issue. So as I would say, a disadvantage for cash basis is more likely to be that you could potentially understate the health of your company, especially if you have contracts. So for those of you who are caterers, those of you who maybe have some contracts either with food service or with particular grocers, and your payments, you receive payments at certain points, but you've already produced the product and you won't receive payment until after, you could definitely run the risk of understating your profitability and understating the health of your business. And so investors, and the opposite, because like I said, I think given where you guys are, and especially in the food industry, I think investors might conclude that the company is not profitable, right? When you're not recognizing your revenues and expenses as you're potentially incurring them versus when they're earned versus when they're actually received. But going to accrual basis, as we mentioned, some advantages include accounts receivables and payables allow for a more accurate picture of your long-term profitability of a company. For our participant that had the restaurants, this probably matters and makes a lot of sense in terms of, with restaurants, I'm sure there are certain things that you have, some payables that you might have out for inventory and things of that nature. So accrual basis would be really helpful for that. Some disadvantages is obviously it doesn't track cash flow quite the same. And so as a result, it might not account for a company having a major cash shortage in the short term, despite looking profitable in the long term. And it can also be a little bit more complicated to implement since it's necessary to account for items such as unearned revenue and any prepaid expenses. So prepaid expenses are, prepaid expenses sometimes can be any expenses that you're paying for ahead of the actual incurring of those. You would want to account for those, that sort of thing. Questions on that? So here's another sort of an example of it that I thought was interesting. I found to use. So the event is in 2012, right? You purchase supplies for a painting job. This goes along actually with that example I was saying of the entrepreneur I work with. But in 2013 is when you receive the payment, right? So let's say it is last quarter, you know, they contracted you for, let's call it a catering job, even though this example says a painting job, right? So let's say it's a catering job, right? But the job won't happen until 2013 for whatever reason. So you're putting together some stuff. Under accrual basis, if the revenue is 100,000, then you would recognize the $100,000. You would recognize, because apparently this person had already spent $10,000 or will spend $10,000 on expenses to create the painting, and therefore the net income would be 90,000. So therefore in 2013, when you receive the payment, you're not making any real adjustments because you already, at least not to the income statement, right? Because you've already recognized that revenue. And keep in mind what I mean by the income statement, because we're talking revenues and expenses versus assets and liabilities, which is your balance sheet reporting. And then, but under cash basis in 2012, you don't recognize any revenue because you haven't gotten any revenue. But you would recognize the $10,000 that you spent on supplies or whatever it is for that particular job in 2012. So that's why you're seeing a net loss of 10,000, right? So let's say if that was the only thing you had. This is the prime example of helping to understand how cash basis can potentially understate your business depending on where you are in your business, especially if you do a lot of business, in the fourth quarter or in the first quarter of the following year, but contract a lot of the business in the fourth quarter. And then, but going on to 2013 in cash basis, you actually receive the payment. So then you recognize the $100,000 in revenue and no expenses. So your income looks higher, at least at the start of 2013.